Great, thanks so much. Can you guys see my screen? Laura, can you confirm?
Yep.
Great. Okay, go ahead and get started here. So I've been working with small businesses for about 10 years now, and I know that tax time can really be a concern for a lot of people, but it actually doesn't have to be that scary. And so our hope today is to sort of take you through what are the major things you need to know as an Amazon seller about taxes. So first of all, there are two types of taxes, sales and income. We'll talk about both, but we'll probably focus on income tax because that's really where your money will be going out to income tax. Then we'll talk about how to stay compliant, so some of the key mistakes that we see Amazon sellers making. And then what are some deductions that Amazon sellers often make. For this program, we're actually assuming that you are a sole proprietor or an LLC, meaning that you're just working on your own selling on Amazon. We know there are some folks selling on Amazon that are bigger businesses that maybe have multiple employees and are set up as a corporation, but this webinar is actually not intended for that. It's intended to cover for sole proprietors. Quick disclaimer: everything that we're talking about today is stuff that is generalized, but for your specific situation, you should always make sure to talk to a tax accountant. So first, sales tax. As I mentioned before, this is something that's paid by your customer, not by you, but you are the one collecting and submitting it. So you're the one responsible as the seller to actually get the buyer to pay it and then to submit it to the state. And there's been a lot of confusion, particularly around Amazon, as to what's going on with sales tax laws. So I wanted to break it down into a simple acronym about how do you go about setting up your sales tax. First, you have to figure out something called Nexus, which I will explain. It basically says which states do you need to collect sales tax for. Then you need to investigate and register. So you've got to figure out sort of all the information about that state, and usually you have to register as well to collect sales tax. Then you actually have to collect the sales tax, which means setting it up on Amazon. And then finally, you just have to track how much you've collected, and you have to remit that money to the state. And so we're calling that acronym NICT. So first, talking about Nexus. So Nexus is it's a tax term, right? So a lot of you maybe haven't even heard of what Nexus is. But basically what Nexus is what states do you have a physical location in? Because if you have a physical location there, that's where you're supposed to be collecting sales tax. There were some laws passed in the 1980s that actually determined that if you live somewhere and the customer that's buying from you lives in that same state, then that's when you're collecting sales tax. But over the years, as online selling has gotten bigger and bigger, it's become more than just where do you physically live. It's also where do you physically work. So if you are doing craft fairs in another state, for example, then you probably have Nexus in that state, meaning you have to collect sales tax in that state. You also have any employee locations or helpers would count as having Nexus. So if your sister-in-law is helping you with your Amazon business, for example, and she lives in a different state, suddenly you have Nexus in that other state. In some cases, suppliers, also if you have suppliers, this is sort of more rare, but if you have a supplier that maybe is drop shipping or that you're actually going to the supplier's location on a regular basis, you could in some cases be considered to call Nexus, to have Nexus in that state and be required to collect sales tax. This one's a little bit more rare, and it's something, if you think it might apply to you, definitely talk to an accountant about that one. And then the one I didn't mention on the slide, but I'll mention, is that often if you're using FBA, so Amazon Fulfillment by Amazon, you are considered to have Nexus in states in which Amazon is holding your inventory and shipping it. So for example, Pennsylvania is one of those states where Amazon has a physical location, and therefore if you're using FBA, you are most likely going to be having to pay sales tax in Pennsylvania. And so now as you think through where you have Nexus, I just wanted to point out a few states to be careful about. One is California. So as most of you probably heard this weekend, California is requiring everyone to collect sales tax in California if you make over $1 million. So if you're under $1 million, you don't need to worry about this, but if you're over $1 million, regardless of whether you have a presence in California, you are required to collect sales tax. Then I want to mention Pennsylvania, Illinois, and Connecticut. because they have been pretty strict with their sales tax laws and have been known to go after people a little bit more in those 3 states. So I just wanted to mention those because if you do in any way think you have nexus or need to collect sales tax in those states, you should definitely consider doing so. Finally, South Carolina and Tennessee. Amazon has stated that they're building fulfillment centers in those 2 states. And so it is possible in the near future that even if you don't have Nexus there now, you may have it in the future once Amazon opens the floodgates there.
Laura, we've got a question about sales tax, actually.
Here, let's fix that real quick. Okay. What you mean?
Okay. There we go. So the question on sales tax is the one for California, is the 1 million a total company? Is the revenue of your total company, or is it just the sales from Amazon?
Yeah, it's supposed to be revenue for the entire company. And the reason being is they're trying to get basically anyone who's a big business is what they're trying to get. So yes, if you are over 1 million, you are expected to be collecting sales tax as of last Saturday.
Great.
Any other questions? Okay, and then I also put a note here that there are a number of laws that are that are coming onto the books or maybe coming onto the books in the near future. Outright has been watching very carefully those laws to see what's going on, but those laws would require a national sales tax law. We're not in support of that, particularly not for smaller sellers, because we think it will cause sort of a heartache for those sellers. But we are watching that carefully because if it does pass, we want to make sure that you all are aware. So we will definitely be sending out emails and stuff like that for our customers if you are a customer when that does occur. The good news is it's probably not going to happen before the election, so there's nothing to worry about in the short term. Were there any other questions on Nexus?
One other question was about Amazon collecting sales tax. So does Amazon collect, the question is, does Amazon collect sales tax for sellers on FBA orders?
So you can set it up, yes, and I will get to that in just a second. So let's hold that question, and I'll cover that in just a moment. Okay. So after you've determined where you have Nexus, so again, where do you need to collect sales tax, the next thing is to investigate and register to collect the sales tax. And what you want to know for each state, find out the requirements, the rates, if there's any exempt items, because a lot of states do have exempt items, and then also how to register. And every state is different, so hopefully you don't have too many states that you have to do this for. At the end of this webinar, we will send out a blog post. We've put together a guide where you can click in on any of the 50 states, and you can see what the requirements are for those states, as well as go to that state's information. So hopefully that'll be helpful for those of you guys that are listening to this that haven't looked into this yet. So you can just go to that one blog post and go from there and read up on it, and then go ahead and register for those states. The next part is what I call the easy part of sales tax, is collecting it. So Amazon makes it pretty easy. You can actually collect it through Amazon, but they do charge a fee for that. And as you can see here, I've put the help topic here that Amazon gives about it. Basically, you register, you tell them which states you want to collect in, what rates you want to collect it, and then Amazon will collect it for you, but will take a 2.9% of the actual tax. So I don't love that they have a fee for that, but it is helpful because you can have them do it. We also do see some of our customers that decide not to collect the sales tax, but they do pay it anyways. And what I mean by that is if you have, let's say you live in North Dakota and you don't have that many sales through Amazon coming out of North Dakota, you may just want to not set this up and then go back after the fact and figure out how much you should have collected and then just pay that. So the negative of that is that then you're paying the sales tax out of your own pocket, which isn't great. But if you're in a state which you're not getting a lot of sales from your own state, that can sometimes work for people. It's really up to you. Obviously I'm in California, so I would probably recommend, particularly if you're in California, to collect through Amazon. But if you're not, if you want to consider not collecting but paying it anyways, that is an option for you. So finally, tracking and remitting. And so this is probably also somewhat easy, which is just making sure that you actually track how much you've collected, because you then need to pay that to the state. And every state has a different rule about when you're going to pay, but most are either quarterly or monthly that you have to pay. And it's usually pretty straightforward. Once you start doing it, it should be easier to figure out how to do it in the future. For those of you that are outright customers, I just wanted to point out the two ways to do it in outright is one is if you are actually just collecting sales tax, we'll capture that from Amazon for you and then give you the total that you need to do, that you need to send in. The other way to do it is to go to our sales by state report. So that's under the reports tab in Outright. You can actually see the different states and where you can click in to see how much money you've sold, or how much you've sold on Amazon or on your other, just in general on those states. Okay, so again, just as a reminder, to summarize the NICT acronym that I'm using, Nexus, so first figure out which states you need to collect in, then go ahead and investigate and register by using our handy blog post, or you can go directly to the state if that's easier for you. And then collect it either through Amazon or by doing it yourself. And then finally track it, make sure you know how much you've collected, and send it in to the government. Any questions on sales tax at the moment?
I don't see any other questions coming up on sales tax.
Great, so we can move to annual income tax. And I like this topic because it's where you can save some money, hopefully. So nobody likes taxes, but if you can reduce your taxes, that's always good. And income tax filing for online sellers, if you're a sole proprietor or an LLC, is the same as the date that you would if you were just an individual, and that's due on April 15th. Unless you file for an extension, then you would get until October 15th. And if you do want to file for an extension, that's pretty easy to do. It's a simple form, and you can do it really easily. The big rub is, though, that doesn't mean you can delay paying the tax. You still have to send in the tax by April 15th. The extension just gives you the time to file. So as I go through, I'll talk about some certain reasons why you might want to do an extension. And I think, Laura, we have a poll.
We do. Let's see.
Just for fun to mix it up, we'll put a poll out there to find out when do you pay your tax.
Okay, so I'm going to take
And there it is. In what month did you file your taxes last year?
So we'll give everyone a minute to answer that question. Okay, it looks like we've got most people answered, so I'm going to close that and share the results. You see it there? Oh, it looks like quite a distribution of how folks pay there. We've got some early birds, but it looks like most people are paying actually in the later months, which is not uncommon. We see that often. People either pay either in January, or oftentimes we'll see them paying in March and the April timeframe as well. Okay.
Go back to the presentation now. Sorry guys, it takes just a second to switch back to the presentation. Great, and you guys can see? Awesome. Okay, so when do you pay your income tax? So this was, the poll we just did was about when do you file, but when do you actually pay it? You guys have trouble seeing it? I think, can you make me a presenter? Show my screen. There we go, sorry about that, you guys couldn't see the screen.
There we go.
Okay, so you pay your income tax on a quarterly basis if you're in certain circumstances. So that means that it's paid on January 15th, April 15th, June 15th, and September 15th. So that does surprise some people when they first see this, because The reason for this is that when you work for a corporation, so let's say I work for Outright, which I do, Outright will take withholding taxes from me. So I'm paying my taxes on a pay-as-you-go basis. If you're a sole proprietor working on your own, you are also expected to pay on a pay-as-you-go basis. But there's nobody taking your tax from you. There's no person taking that money out of your quote-unquote paycheck. And so you need to do it yourself. And so the dates listed here are the ones in which you do that. And it's a simple form. And what you're supposed to do is figure out how much tax you owed for that quarter, and then pay that tax as you go. And it's required if you are going to be paying more than $1,000 in taxes at the end of the year. And so if you're making a lot of money and you have no spouse that's paying withholdings, then you probably do need to pay estimated taxes. If you're only making a little bit, and maybe your spouse is working at a full-time job and is paying withholdings, you may be able to get away without paying it. But either way, you want to make sure you think about it, because there are fines if you don't pay on a quarterly basis. So definitely something to talk to an accountant about if you are concerned about this. The good news is that with interest rates so low right now, the fines are actually pretty reasonable, so it's not going to break the bank for you if you do come into trouble with this. That may not be true though in the future. As interest rates go up, it could get much worse. So you want to make sure you get this taken care of. And the other thing is, for Amazon sellers, the big thing to know about is the 1099-K. And this was something that was started last year. It was actually from a law that was passed in 2008 that came into effect last year. And what it is it requires a form. It's basically a form that requires Amazon to send to you and to the IRS. And on this form, they're showing you your gross revenues. It usually comes at the end of January. So for those folks that like to file in January, which we saw there's a few of you, you might want to watch for that and make sure that if you're going to get a 1099-K, that you have that before you file your taxes. And you will only get one if you had more than $20,000 in sales and sold more than 200 items. So you have to meet both of those criteria in order to receive one of these forms. And that limit is based on all of your Amazon accounts combined. And Etsy and PayPal also send them, but it's also the same limits for them, and it's totally independent. So in order to get 3 forms, you have to sell 20,000 and 200 items on each of those 3 places in order to get 3 forms. So I think it's going to be a pretty rare case that people will get all 3. There might be people that get 2, particularly people who sell on eBay and Amazon may end up getting 2 forms. And so what do you do with this form when you receive it? So again, we have an acronym. Hopefully that'll help you remember it. We say REDIT, which is reconcile. Just make sure it's right. Figure out your expenses, because the 1099-K only reports your revenues, which you can see here on the form on the right. Your revenues you've got a bunch of revenues, but then you're subtracting all of your expenses to come out with your total tax bill. And so the higher your taxes are, or the higher your expenses are, the less taxes you're going to pay. So you want to make sure that you really document and have all of your expenses in place, particularly now that this form is reporting your revenues to the IRS. Deductions. You want to make sure that if you are eligible for any deductions, that you take those, and I'll talk about later about what some of those might be. And then finally, you want to double check it to make sure that you reported your taxes correctly with this form, this 1099-K form. So for number 1, reconcile. And when I say reconcile, I say that kind of loosely. Like, you don't need to prove, the IRS has actually stated you don't need to prove out exactly that your books match what came on that form. But you do need to understand what is on that form, because that will help you to understand all the rest of what I'm saying. So the 1099-K reports your gross revenues. So let's say you have a return. That doesn't come off of your 1099-K. So that's going to still be in there as if you made the sale and nothing ever happened, you got the money. If you have a fraudulent transaction on your account, somebody defrauds you, that will still show up there. If you have shipping income that you've got, that'll be on there. So there's a bunch of different things that are going to be on there. That number will probably be higher than you're used to seeing, or higher than you normally think of your own business. Because you usually see the money after Amazon takes out all their fees, whereas now you're going to see that number without those fees taken out, so it's a much higher number. And the reason it's so important to understand that is because then you know what you need to put on the rest of your tax form to reduce your taxes, because those fees and those shipping costs and all that should be coming off of your taxes. And so that brings me to number 2, to the E in red. The E is expenses, making sure that you capture all of those expenses. And the big one is, the Amazon fees, if you're on eBay, the eBay fees, any refunds you have, any supplies you're buying, if you're throwing away product because it's unusable, it went obsolete, maybe you have an iPhone 3 that you can't sell anymore, you might throw that away and you could use that as an expense. So you really, really, particularly if you're going to get one of these 1099Ks, want to make sure you're doing that. Because that number that's coming on the 1099K is going to be higher than what you actually made from your business. Deductions. So we'll talk about that later, but make sure that you talk to an accountant if you think there's some deductions that you might be missing.
We've got a good question about from Stan. What if someone buys from him using an Amazon gift card? Does that hit our 1099K?
Yes, it will. So, because it's considered revenue for you, so it will hit. Pretty much any transaction that happens in your Amazon account is going to show up on that 1099K. And so then your job, that's sort of expected to be your revenues. Your job is to figure out, well, what are all the expenses that I had against that revenue? And make sure you don't miss any.
Right.
Because and that's a bit of a confusing point for people, because when they see that number, it freaks them out because it's so high. But it really doesn't need to freak them out, because it's, if you have the expenses, you can put that on your taxes, and that's justifiable. Yeah. And so that brings us to our last of the red, the other D, which is double check. And this is a very specific thing I'm asking you to double check, which is on your Schedule C form, which is where, if you're a sole proprietorship, this is where you're reporting your business income. You want to make sure that your line 1D matches or exceeds what was on your 1099K. Or if you got more than one 1099K, like you got one from PayPal and Amazon, then the sum of that. And basically what this is saying is that the income that you are reporting for your business is either the same or more than what Amazon reported for you. And if you're reporting less than what Amazon says you made, that's when the government gets worried. And they'll either audit you, or they'll, in most cases, send you a letter saying, hey, you underpaid and you owe us not only the tax, but also some fines for underpaying. So that's not good. So, and again, the question I always get here is, well, what if that number on the 1099K is too high? And the answer is, well, you should always be reporting what's on the 1099K or more on your taxes, and then take those expenses and deductions to reduce it. Are there questions coming up on this?
Nope.
Great. Okay, keep going. Yep, so again, reconcile expenses, deductions, and double check. So next part of this, I wanted to talk about staying compliant. What are some common mistakes by Amazon sellers? We already talked about a few, but I wanted to bring up just a couple extras that we've seen quite a bit. We often get a lot of questions on inventory. So inventory is any item that you resell, or anything that goes into making items you sell. So if it's included in the item that's being sold, it's considered inventory. If it's not in the item, then it's not. Like scissors that you're going to use to cut fabric, those aren't being sent to the customer, as they're just being used as a supply. And the reason why inventory is important is because you need to know what your inventory is at the end of the year, because you cannot expense that inventory until you sell it or scrap it or donate it, right? So if the inventory is sitting in your room or your home, that is not, you cannot take that off of your taxes. That's not an expense until you actually sell it. And so for a lot of you, you're probably using what's called a cash basis accounting, meaning that as soon as you have an expense, you're gonna deduct that from your taxes. Whereas with this is the one thing that needs to be done differently, which is that you only can expense it in the year that you use it. The good news is that really the only time this comes into play is right at the end of the year, so in the December-January timeframe. There are some unique cases in which it'll affect your estimated taxes, but I would say that's probably only a very small portion of you. The vast majority of you just need to worry about this in December and January. And there are some people that are very rigorous about checking their inventory and making sure that they've got the exact numbers that their accounting is perfect. But we've also seen people that just at the end of the year they'll go around their house and they'll see what they have left, and then they'll just remove that from the expenses that they've compiled for the year and put it towards the next year's expenses. And the reason we say it's not as scary as it may sound is because the government tends to be pretty lenient around this one. If you're, as long as you're paying your taxes, and if some of the expenses end up in January instead of December or vice versa, it's not the end of the world. So just want to make sure you're aware of that. The other thing I often get, how do I pay myself a salary? Well, if you're a sole proprietor, you don't. So that's why it's a clear no. There's no such thing as a salary if you're a sole proprietor, because your salary is just the income that you made from your Amazon business. So you are not going to be paying yourself a salary or taking any sort of deduction or anything like that from a salary. So those were the two big mistakes I see, besides the 1099-K stuff that we talked about before. So now the fun part, as I mentioned at the beginning, is deductions. What are some common deductions that I see Amazon sellers taking? Because those can actually help you save on your taxes. And why? More deductions is less tax, and more exemptions and more money for your business. That's always a good thing. So the first one is the home office deduction. And I'm guessing a lot of you have heard that the home office deduction is a big audit flag, but that's actually not true. It used to be true. So in the 1990s, if you had a home office, the government and the IRS would come after you for sure and do an audit. Nowadays, with so many people having home offices, the IRS has actually stated that this is not an audit flag. And what the home office deduction allows you to do is write off a percentage of your mortgage payment or your rent or utilities. So there's a few key things here, though, to watch out for. One is that if you are writing off a percentage of your mortgage payment, then that's coming off of the cost basis for your house. It's a little bit of a hard tax term to explain, but there are some things you want to watch for if it's actually a mortgage. If it's rent or utilities, you don't have that at all, so you don't need to worry. And the rule that the IRS has is that you must exclusively and regularly use the portion of your office. It must be sort of dedicated as your office. And so the way you can do this is you can actually mark off a section of your house to be your business area. What doesn't work is, let's say I've got a spare bedroom with a bed in it, and now I'm putting all of my inventory in there. That whole bedroom is not considered to be exclusively and regularly for business because you have a bed in there. And just having a bed suggests that you're doing things other than just working there. What you could do is you could cordon off half of that room and put all your inventory there, and then that could be your home office. We also see a lot of people using their garage. So if you're selling on Amazon, you may use your garage. And if you're not using your garage at all for your cars or anything like that, then that would be a valid use. And so the idea is you're taking whatever your rent is, you figure out what percentage of your house or your condo is being used for business, and that's the percentage of your rent that you can take off with this deduction. And if you are or not planning on taking this deduction, I would highly recommend just get out a camera and take a photo of your home office. For two reasons. One is if you do end up taking the deduction, then when the government comes knocking, or if they ever come knocking asking questions, you can show them that this is a home office. And two is so you can show your accountant. So your accountant can evaluate whether or not you should have this deduction. And usually just by seeing it, the accountant can say, yes, this is a home office, or no, it's not. Contributing to retirement. So there actually are retirement plans that you can sign up for as a sole proprietor. So you can look them up online. There's an individual 401k that you can do, and there's also a SEP IRA. And so if you have extra income or things that you're not using immediately, you can actually put that into the retirement account and defer those taxes until later. And this is a case in which, let's say you want to reduce your taxes. Let's say in January you do your taxes, and you go, oh my gosh, I owe a lot more than I expected. What you can do is you can actually defer your taxes. You put in one of those extensions, and then in the meantime, while you're waiting the extension to go out, you can start saving up money and putting it into those retirement plans, and you can actually deduct that from the previous year. So it's pretty cool. So if you're in that situation where your tax bill is really high and it's not, and you don't want to pay it to the government, you actually just pay it to yourself as retirement. Finally, mileage. So mileage is an interesting one because we did a study of Amazon and eBay sellers that we work with, our customers, and what we found is that mileage is the #1 missed deduction for these folks. And the idea is that every time you take mileage for a trip, so you go to the post office to drop something off to be shipped, for example, that is considered a business trip, and you can actually deduct mileage for that if you're tracking it. So ways you can track, you can download MileBug for your smartphone. Sorry, I got a bug in my throat there. You can also use the Outright app. We actually have a way to add mileage. So if you go to the expenses tab in Outright, you can actually add mileage from there. You can also add it in Outright's mobile app. We have an iPhone app that you can get from the store, and you can actually track your mileage there and actually put it in. Another way you can do it is you can take a picture of your odometer right when you start the business trip and right when you end, and then deal with it at the end of the year. That one's a little harder because then you end up with a bunch of photos at the end that you then have to sort through. But definitely, if you can do MileBug or the Outright app, both of those would be good. The common mistake is if you do take the mileage deduction, you cannot also deduct gas. It's sort of like you have to take one or the other. So gas is not an expense if you're taking mileage. 95% of the time, it's better to take the mileage deduction because it's 55.5 cents per mile, which is more than you're going to pay for gas. So it's definitely better to take the mileage. But if you haven't been tracking it, then you would just take the gas instead. So just to summarize everything, so for sales tax, again, NICT, figure out where you need to pay, figure out what the rules are and register, and then collect the payment and send it to the government. For income tax, again, remember to reconcile. So make sure you understand what's in your 1099-K. Not a full reconciliation, just a sanity check. And then expense, make sure you've got all your expenses in line and that you're tracking it throughout the year. That's something you can take hold of now. It's great that you're coming to this in September because you have some time to really start tracking your expenses and trying to understand what you're doing. If you're an Outright customer, we do it for you because we pull in all of those expenses from Amazon and from your credit card accounts. So make sure that if you are an Outright customer, that you have all of your accounts added to Outright so that those expenses are flowing in and you'll have them at the end of the year. It'll make your life so much easier and it'll save you money. Deductions. So again, I talked about some of the common deductions. And then finally, that double checking that you're meeting requirements, that you're not setting up a red flag because you underreported your income. So that is that on Schedule C, line 1D, that very specific thing to double check. And so now I'll open it up to any additional questions that we have. And you can always contact me at lauram@outright.com if you have any follow-up questions that you don't want to ask right now. So Laura, are there any questions?
Let's see if we got any questions coming in here. It looks like we have one question. Can you depreciate your inventory?
So that's a good question. Usually not, because your inventory is, there might be some cases in which you could, but most of the time no, because your inventory is just your inventory and you're going to sell it as is. If for some reason your inventory is maybe like iPhones, for example, they would depreciate, you might actually be able to depreciate those because they'd be getting less and less valuable over time.
As the new model come out.
Yeah, exactly. Right. So in those cases, like electronic sellers, maybe if you like used cars that are getting even more used in the meantime before you sold them.
But that would be something that we would suggest folks really talk to their accountant about to make sure.
Yeah, if you're going to do that, I would definitely talk to an accountant.
Yeah. Let's see. We've also got another question here from Paula. Can you use a Schedule C for an LLC?
Yes, you can. So yeah, if you're an LLC or if you're just a sole proprietor, both of those use the Schedule C. In fact, that's the main way to do it.
Right.
Of the 27 million small businesses in the United States, 22 million of them use a Schedule C. So it's a very common form. And it's attached to your regular tax return for your individual. And it's a pretty easy form. I showed you what it looks like.
Right, and for those people that use Outright, within Outright, there is the actual Schedule C worksheet
Yeah.
that helps you basically map all of your line items to the Schedule C.
Yeah, that's a good point. When you go into Outright, you go to the tab called Taxes, and then you'll see the first tab there that shows up immediately is it's annual taxes, and it shows your Schedule C, and we fill it out for you. There's a couple lines we don't fill out, like some of the deductions, but everything that we have access to, all of your expenses, are all summarized on that form for you, so you can just move. You can just literally take those numbers and move it, or if you're using some of the accounting softwares or tax softwares that we work with, like One Price Taxes, is an example. One Price Taxes is a pretty cheap and good tax software you can use, and you can actually just download everything from Outright into One Price Taxes. So that is great, a great service for people. And it is a lot cheaper than TurboTax, by the way, in case you're wondering. And so that's one of the reasons why we integrated with them, was because of that. We realized that for people using it, that it was a lot cheaper.
This is a really good question we've got here. Is there a penalty for not having collected sales tax for previous sales? And is there a trigger or point where you absolutely must begin collecting sales tax?
Yeah, good question. So, yeah, there can be penalties for not collecting in the past. I would say the states with online sellers have been pretty lenient.
Yeah.
There's been some exceptions, like I think I mentioned, I think it was Pennsylvania that said, anything before February of 2012, we don't care about, but after February 2012, we're going to track you down and get it from you. So for those states in particular, you really want to watch out. I would say if you're somebody who hasn't been doing this at all and now are thinking about it, I would say just start, yeah, and hopefully they're not going to pick up on it. And the government understands the difference between trying to actively defraud them versus like just not doing it right. And they will treat you very differently depending on which one you are. And I think for most people on this call, you're trying to do the right thing, so you shouldn't worry that much about this.
Right. It's just a confusing topic, and I think we've started to see at Outright here, though, the more and more, there's much more rigor around the topic and new laws coming into place. And so we definitely recommend that if you haven't been doing it, that you start doing it and worry more about the going forward.
And the question about, is there a limit, at what point should you start collecting sales tax? And I would say the answer is actually, for most states, it's going to be from day one. So there is no limit. But that obviously varies by state. So I'd suggest you take a look at that blog post I referenced. I'll send out the link afterwards. And you can go look up your particular state that you're interested in and see what their specific restrictions are.
Let's see, we've got one more question about Nexus and state tax. Besides state sales tax for states where you have Nexus, how do you find out what the local or county taxes are?
Yeah, so that one can be difficult. Most states, there are some exceptions, like New York would be a big one. Most states, you can actually just use the county that you're in, that you're located in. So that makes it a lot easier. If you're in New York, then suddenly you do have to worry about, you're supposed to collect the sales tax based on the county in which the buyer is in. So for now, it's pretty manual process. You actually do have to go look up the different ones, and you have to set it up in Amazon. So that's not so fun if you're in New York. I do think over time that's going to be rectified, because it's not sustainable for people to expect them to be able to do that.
Mm-hmm.
So do the best you can. That would be my guidance.
Let's see, there's a question. Do you have Nexus in any state that Amazon has a shipping facility?
You do if you're an FBA seller that has inventory in there, or at any time in the year had inventory in there. So for
in
FBA,
their shipping facility.
Yeah. So for FBA states, yes. I think the states, I'm not 100% sure which states they are, but I think it's definitely Pennsylvania and Texas. And then I know that they're opening in South Carolina and Tennessee.
Right.
And I think Kentucky might also.
I think Kentucky is in there. You're right. Yep.
Yeah. And maybe even North Dakota. But Amazon, you could look up on Amazon's website to confirm those states. And if you are an FBA seller, most likely you do have Nexus and you do need to pay. Or I should say, you need to collect. I should clarify, because this is, again, sales tax is something the customer pays, not you.
And then a follow-up question on that is, um, how do you keep track of that?
So it can be difficult. Amazon, if you use their service, will keep track of it. Outright will keep track of it for you, so you can actually see it. If you're not using that, you probably have to use a spreadsheet. Yeah, we probably don't recommend that too much. I would either use Amazon, or if you're an outright customer, use it with an outright. It's a lot easier. But yeah, spreadsheet would be the next best thing to track that. It's not too difficult to track unless you're in, like, if you're in New York, then it becomes difficult. But if for a lot of the other states, it's simple. For each state, you just need to track it.
One more question about calendar dates. Does Amazon use order date or ship date to define year of tax?
So I think for Amazon, it's usually the ship date, because they basically they charge the customer when you ship it. So that's the date that Amazon would normally use it.
Yeah, that's a good question.
Yeah, I'd probably need to double check that, but I believe that would be the case.
Let's see, we've got some other questions in here.
And I should say, sorry, I should clarify. If you're doing cash basis accounting, then it's sort of up to you. But you might actually decide to, as soon as the money comes in for you, that's when you would record the sale.
Oh, great. Someone has told us here that, yes, Amazon has opened the South Carolina and Tennessee warehouses.
Oh, good to know.
Yes.
Okay.
So thank you for that.
Yeah.
Yes.
In which case, you might have Nexus there if you have stuff there. Interestingly, Amazon has negotiated that they don't have to pay sales tax, or they don't have to collect sales tax for those 2 states until 2014. But you, as a seller, still have to if you have inventory in those warehouses, unfortunately.
Great. There's another question here. Does Outright integrate with any other software? Actually, maybe some clarification on that question.
Yeah, so we do.
Other marketplaces,
yeah,
perhaps?
We integrate with eBay, Etsy, Amazon, PayPal, PayPal here, basically all major credit cards, all major banks, FreshBooks, Shoebox. There's a long list of integrations that we have, and that's, for those of you who aren't outright customers, to explain what that is. It's basically we take all of the data on a nightly basis, a one-way read-only connection. We bring all that data into one place and summarize it for you on your tax form as well as with reports. And your FBA sales, if you're on Amazon one, they will come in through that as well.
Great. Let's see, we've got a few more minutes here. Let's see if there's any other questions coming through. Well, it looks like we've got most of the questions answered. It looks like we don't have any more coming in. We'll give folks one last call on questions. You can always email us after, and we'll send a recording out so you can view the presentation again if you have any other questions. But we'll give you
an outright, and I will also be at the Amazon conference that's happening at the end of September, at the end of the month. In Seattle. So for any of you that are going there, we would love to say hello. Please stop by our booth and say hi.
Right. And for those of you who don't have an Outright account and are interested in one, just go to outright.com/Amazon and you'll be able to sign up for one there.
And it is free.
It is free. That's right. Okay. Great. Thank you, everybody. Have a good day.